Stay ahead with our weekly economic insights where we break down the latest personal finance news. Hi, I am Soumya Jain. In today's video, we'll discuss the latest domestic and international economic developments to equip you with the knowledge you need to make better financial decisions. We'll begin with SEBI's new circular on transaction charges and its potential impact on discount brokers. Next, we'll explore HDFC Bank's temporary suspension of UPI services for system upgrades. We'll also discuss Reliance Jio's significant tariff hike and discontinuation of popular prepaid plans. Additionally, we'll cover the private lenders' recent surge in personal loan interest rates. Furthermore, we'll touch on SEBI's new proposal for mutual funds, including MF-light regulations and risk-adjusted return disclosures. We'll also look at SEBI's decision to reduce the minimum bond investment to Rs 10,000 and its implication for retail investors. The government's initiative to offer licensing fee concessions for women entrepreneurs and MSME will also be discussed. Finally, we'll review the performance of market indices for the week. Let's start with SEBI's new transaction charges circular. The Securities and Exchange Board of India has issued a new circular on transaction charges affecting discount broker firms like Zerodha, Grow, Angel One and Motilal Oswal. Currently, discount brokers earn 15 to 30% via these discounts, while deep discount brokers earn 50 to 70%. The new rules will take effect on October 1st, 2024. Let's check with our expert take section to see what our experts think about this. Krishna Rath, SEBI registered investment advisor, is joining us to share his viewpoint on SEBI's this latest circular.
Thanks for having me on this show. First, let's try to understand what the basics are. So, a broker lies between you and me, the retail players, and connects with the market infrastructure institutes, which are the stock exchanges, the depositories, and the clearing corporations. So, previously, discounted brokers had an agreement or a tie-up with the market institutions, wherein if they bring large volumes, they would put a rebate on their prices. And hence, many of these discount brokers were able to provide discounted pricing for their customers. Now, SEBI in its 1st July circular mentioned that the market infrastructure institutes have to charge a uniform rate to all its members, that is to all its brokers. So what this means is that the entire business model on which the discounted brokers are based on, that is bring large volume and we get a rebate. Very similar to some of the large retail shops, right? You know, you go and get large quantity, you get rebate from the supplier, and hence you can pass on some of the rebates to the purchaser. So the discounted brokers were based on that principle. Large volume, we get rebates. SEBI says, no, that's not possible. You cannot get rebates. So the discounted brokers will now have to tweak their pricing models. We may get into a place wherein we may have to face a little bit of charges on the equity deliverables. That is the zero pricing, which is there in most of the discounted brokers, may go away, or it may be that the speculative trading or the F&O trading, intraday trading, they may get charged higher. So it all depends on what the brokers come up with from October 1st. They have time till October 1st. Now, how does it impact investors? So for investors who are doing their monthly equity SIPs in equity mutual funds, they are not impacted. For most of the investors who are looking into stocks and equities as long terms, will be barely impacted. Let's also take some incident in the past where long-term capital gains was introduced. They did not have any negative impact in the market. So for those who are long-term players who are looking at investment and taking opportunity of the growth of this nation and the world, may not be impacted. Certainly, many of the speculative traders and many of the intraday traders may be impacted, as most brokers may charge higher prices on the speculative side because anyway in speculation, people are there to lose money, right? So why not charge them a little higher?
Moving on to HDFC Bank's temporarily UPI suspend. HDFC Bank, India's largest private sector lender, will temporarily halt its UPI services on July 13, 2024, as it upgrades its core banking system. The upgrades aim to enhance performance, capacity, and reliability for its 9.3 crore customers. UPI services will be unavailable for 240 minutes in two batches, from 3 a.m. to 3:45 a.m. and 9:30 a.m. to 12:45 p.m. Other services like net banking, mobile banking, and card transactions will have limited availability during 13.5-hour upgrade period from 3 a.m. to 4:30 p.m. The bank advises customers to withdraw sufficient funds before 7:30 p.m. on July 12th and plan fund transfers in advance to minimize disruption. While this temporary service interruption may cause short-term inconvenience, the system upgrade will likely improve HDFC Bank's long-term performance and customer experience. Moving on to Reliance Jio's recent announcement. Reliance Jio has announced a significant tariff increase starting July 3rd, 2024. The company has also discontinued two popular prepaid plans, the Rs 395 and the Rs 1559 options. These plans were favored for their unlimited 5G data and long validity period. Many users rushed to recharge their accounts before the new rates became effective, only to find that these plans were no longer available. Jio's move is likely due to the lower average revenue per user generated by these popular plans. Other telecom providers like Airtel and Vodafone Idea have also announced price hike. While this may lead to increased revenue for telecom companies, investors should consider the potential impact on customer retention and market share in the competitive telecom sector. Now let's discuss the recent changes in personal loan interest. Several private lenders, including ICICI Bank, Kotak Mahindra Bank, HDFC Bank and Axis Bank, have increased their personal loan interest rates by 30 to 50 basis points. This comes after the Reserve Bank of India raised the risk weightage for personal loan in November 2023. For example, ICICI Bank now offers personal loan at 10.8% interest, up from 10.5% earlier. Kotak Mahindra Bank's rate starts from 10.99% compared to 10.5% previously. HDFC Bank's rate increased from 10.35% to 10.75%, while Axis Bank's rate rose from 10.49% to 10.99%. These changes aims to make lenders more cautious about unsecured retail loans. Higher interest rates may make borrowing more expensive, potentially affecting personal finance decisions and debt management strategies. Let's move on to SEBI's recent proposal for mutual fund. The Securities and Exchange Board of India has proposed several changes to mutual fund regulations. SEBI suggested introducing MF Lite regulation for passively managed schemes, reducing compliance requirement and encouraging innovation. SEBI proposed that mutual fund schemes disclose risk-adjusted return alongside regular returns to help investors make informed choices. SEBI mandated that starting August 1, 2024, consolidated account statement be dispatched via email as the default mode. These changes aims to simplify regulations, improve transparency, and make account information more accessible to investors. These proposals could lead to more diverse investment options, better informed decision making, and easier access to account information for mutual fund investors. It's important to stay informed about these changes and how they might affect your investment strategy. Now, take a look at SEBI's recent decision on bond investments. The Securities and Exchange Board of India has reduced the minimum bond investment from Rs 1 lakh to Rs 10,000. This significant change aims to encourage more non-institutional investors to participate in the corporate bond market. Issuers can now offer debt securities or non-convertible redeemable preference shares on private placement at face value of Rs 10,000. This move is expected to increase liquidity in the bond market and provide retail investors with more options in terms of issuers, ratings, tenure, and returns. However, experts advise caution and thorough due diligence before investing, as the bond market can be complex. This change opens up new investment opportunities for retail investors, allowing them to diversify their portfolios with corporate bonds. It's a chance to earn higher returns than traditional fixed deposits. Now let's discuss the government's initiative for women entrepreneurs. Union Minister Piyush Goyal has announced an 80% concession in licensing fees for women entrepreneurs and a 50% reduction for MSMEs. This move encourages great participation and entrepreneurship by women and small businesses. The announcement came during a stakeholder consultation focused on enhancing efficiency within the Petroleum and Explosive Safety Organization. The minister also directed PESO to establish safety guidelines for petrol pumps near residential areas. Additionally, steps are being taken to streamline regulatory processes by adopting global best practices and integrating online permissions modules. This initiative could increase women's and MSMEs entrepreneurship, potentially creating investment opportunities in diverse sectors. It may also contribute to overall economic growth and development. Let us wrap up with this week's market performance. The Sensex declined by 53.07 points, closing at 80,049.67, while the Nifty rose by 21.7 points, ending the day at 24,302.15. On July 4th, domestic institutional investors recorded a net flow of Rs 2,375.18 crore, with a buy value of Rs 11,303.32 crores and a sell value of Rs 13,678.5 crores. In contrast, foreign institutional investors had a net inflow of Rs 2,575.85 crores, buying stocks worth Rs 13,837.28 crores and selling stocks worth Rs 11,261.43 crores. That's a wrap for this week's Economic Insights. We've explored major shifts across various sectors, reminding us just how dynamic the financial landscape can be. Stay informed to navigate these changes and make informed decisions about your financial future.